Hi, my name is Nur Shokina binti Saiful Ismadi. Today, I would like to present about the business organisation that our group chose, which is Kedai Kek Balkisha dan Nasi Kampung Gerigis. We have two objectives, which are perform communication skill related to tasks and explore financial accounting and reporting for sole proprietorship. Next, we have 5 structure overview. Firstly, business background. Secondly, business characteristic. Thirdly, is a financial element. Fourthly, is a recording process. And lastly, strength and weakness. Now, we move to business background. Okay, Kedai Kek Balkisha dan Nasi Kampung Gerigis is an enterprise business organisation. Okay, the type of business for Kedai Kek Balkisha dan Nasi Kampung Gerigis is a sole proprietorship. The location is at Main Road of Sungai Dua, Butterworth. The business activity are selling cakes, food and beverage, accepting for order cakes and catering service. Okay, for your information, Kedai Kek Balkisha dan Nasi Kampung Gerigis do catering services and it's served for lunch meal. Okay, now I will pass the next presenter, which is Izwan.
Good day, everyone. Thank you, Kina, for her insightful presentation on the introduction and business background. Now, I will be discussing the business characteristic of our sole proprietorship, Kedai Kek Balkisha dan Nasi Campur Gerigis. The business operates under the enterprise business structure registered with the Companies Commission of Malaysia, Suruhanjaya Syarikat Malaysia SSM. This structure is one of the simplest and most popular form of business in Malaysia, particularly for small businesses and sole proprietorship. It requires fewer formalities compared to corporation, making it easier to set up and manage. However, it comes with its own set of characteristics and responsibilities, which I will elaborate on. First, the capital to establish and sustain this business is contributed entirely by the owner, Puan Rozaini binti Ramli, from her 5 years of financial saving. This approach is highlighted as a personal commitment to the business, as the owner invests her own resources to fund operation and growth. While this eliminates the need for external financing, it also places full financial responsibility on herself. She also bears all the risk and reward associated with the businesses. If the business thrives, she enjoys all the profit. If it incurs losses, she bears them fully. Second, Porzani retains full ownership of the business and has complete management control. She oversees day-to-day operation and strategic decision-making, such as managing employees, making purchasing and inventory decisions, setting price for product or services, and creating marketing strategies to attract and retain customers. To support her, her husband assists with certain operational tasks, creating a collaborative effort that strengthens the management. This hands-on approach is typically for enterprise, where the owner plays a central role in the business success. Next, one significant aspect of enterprise structure is unlimited liabilities. In Puan Rozaini's cases, where the business is entirely funded by her personal saving and no external loan or financial has been taken, unlimited liabilities still mean that she is personally responsible for any debt or obligations incurred by the business. Issues such as unpaid supply bills, breach contract and customer complaint, which fall under legal liabilities, and employee-related liabilities such as unable to pay staff wages or benefit. Unlimited liability increases financial risk of the owner, as there is no distinction between personal and business liabilities. The enterprise structure is designed to be simple and cost efficient, with the trade-off for not offering limited liability protection. It's particularly suitable for small-scale businesses where the owner is confident in managing risk and has a strong understanding of the market. While unlimited liability poses risks, business owners can take proactive steps to mitigate them, such as ensuring the business operates within its means to avoid accumulating any liabilities, having proper contract, ensuring quality products or services, and purchasing liability insurance to protect against unforeseen events. While unlimited liability may appear daunting, it reflects the entrepreneurial spirit of owners like Puan Rozaini who are willing to assume full responsibility for the business success. Finally, in managing the business finances, a manual recording system is employed for bookkeeping. While this traditional method might lack the automation and efficiency of digital system, it allows the owner to maintain a close understanding of the business financial health. By manually recording transactions, Puan Rosani gains first-hand knowledge of the business financial activity. Writing down each transaction from income to expenses fosters a deeper understanding of cash flow and the business overall financial health. This personal involvement ensures no detail is overlooked. Manual systems are straightforward and don't require training or technical expertise. They can be maintained with just a ledger book, pen, and calculator. This simplicity is particularly beneficial for owners who may not be familiar with or have access to modern technology. However, as the business grows, transition to digital accounting might be worth considering to streamline process and ensure accuracy. To summarize, the enterprise structure offers several advantages such as simplicity and cost effectiveness. However, it also requires the owner to shoulder significant responsibility, including financial risk and operational control. This characteristic make it ideal for small businesses where the owner is deeply involved and committed to the business success. Now, let's transition to the next segment. I will pass the floor to Faris, who will discuss the business classification topic. Faris, over to you.
Thank you, Mr. Izwan, for the presentation about business characteristics. So for now, I will continue for business classification for kedai kek Balkisha and nasi kampung Gerigis. We move to the next slide. So for kedai kek Balkisha, they have business classification like asset. They have two types of asset, which is tangible asset and intangible asset. Asset are resources owned by the business and are expected to provide present and future economic benefits to the business. So, for tangible asset, they got shop building, freezer and chiller, kitchen stove, cooking utensil, baking oven, catering and buffet utensil, dining table and dining chairs. For intangible asset, business name registration and also trademark, which is kedai kek Balkisha and nasi kampung Gerigis. Next, they have equity, which is business capital that are contributed by the owner of the business, and also revenues. Their gross profit per year is 5,535 ringgit, which is for per month 143,910 for 26 days open. Liabilities, so their current liabilities is land rent, so daily, weekly and monthly goods, which is account payable to the supplier. For expenses, they have daily expenses, weekly expenses and also monthly expenses. For daily expenses, they spend for dry goods and also wet goods, which is condensed milks, sugar, cooking oil, rice, cordial, beverage powder. And for wet goods, they spend for fresh vegetables, fish, chicken and seafood, which is about 400 ringgit per day. So for weekly expenses, they spend for herbs and spice, eggs and also cake ingredients, which is about 400 ringgit per week. And for monthly expenses, they have 6 person workers, and for each person, the salaries is about 1,500 ringgit and allowance, which is 200 ringgit per person. For utilities, for electric and water usage, which is 800 ringgit per month, and also for store rental, it's about 1,200 ringgit per month. I'll pass it to the next, which is Rahmat, our presenter. Thank you.
Thank you, Faris, for your wonderful presentation. Hi everyone, my name is Rahman, and today I'll be explaining the recording process of Kedai Kek Balkisah and Nasi Kampung Geregis. As a sole proprietorship business, their financial recording process is straightforward, yet efficient, ensuring accurate tracking of their daily operations, expenses, and profitability. Let's dive into the details. Daily sales recording. The recording process begins with daily sales tracking. At the end of each day, total revenue is calculated, broken down into three categories: cash sales, e-wallet transactions, and credit or debit card payments. For example, if the business makes 1,000 from cash sales, 500 from e-wallets, and 300 from card transaction, the total daily revenue is 1,800. This information is then recorded in the sales ledger, categorized by types such as food, sales, beverages, catering orders, or custom kits. The structured approach ensures that every transaction is accounted for accurately. Expense tracking and inventory management. Next, we have expense tracking. All costs are recorded in the expense ledger, categorized as operational or administrative. For instance, daily expenses might include 300 for raw materials and 150 for utility bills and 200 for staff wages. Each expense is supported by receipt, ensuring transparency and proper documentation. Additionally, the business manages its inventory weekly. Raw materials like flour, sugar, and other ingredients are monitored to track usage, prevent shortages, and avoid overstocking. This ensures a smooth flow of operation. Final adjustment and monthly statement. At the end of each month, the business makes final adjustment to its record. This includes handling prepaid expenses, accrued expenses, and calculating depreciation for fixed assets like tables and chairs. These adjustments provide a complete financial picture. Using this data, the business prepares a monthly profit and loss statement. For example, total revenue might be 54,000. Total expenses, including wages and utilities, could sum up to 30,000. This result in a net profit of 24,000 for the month. Finally, the business updates its balance sheet asset such as cash, inventory, and fixed asset might total 19,000. After accounting for liabilities like 500 outstanding utility bill, the owner equities stands at 8,500. This process helps the business stay on top of its financial health. Archiving and professional consultation. To ensure compliance and prepare for audits, the business accurately archives all received invoices and financial statements, both physically and digitally. Quarterly, they consult an accountant to review records and ensure compliance with tax regulation. This not only provides professional insight but also maintains accuracy and financial reporting. In conclusion, the recording process for Kedai Kek Balkisah and Nasi Kampung Geregis is structured and well-organized system that tracks every financial aspect of the business, from daily sales and expense tracking to monthly statement and professional consultation. These practices ensure the business operate efficiently and remain financially healthy. Thank you. I will now hand over the next part to my friend Azrul.
Well, explanation for Rahman's side for recording process. I will continue on strength and weakness. Our business model simplicity is one of its most significant advantage. The menu system we use for a recording transaction is easy to understand and requires minimal training, saving time and resource. This straightforward approach ensures every transaction is accounted for, allowing us to stay closely connected to our financial operation. By avoiding expensive accounting software or technology-heavy system, we are significantly reduce operational expenses. This aligns with our goal of maximizing profitability while maintaining sustainability. The menu system also offers flexibility to customize process such as segregate catering order, cafe sale, and inventory tracking. Customized that will be more complex with rigid software solution. Our independence from technology is an often overlooked benefit. Unlike business that rely heavily on software or cloud system, we avoid issues like data corruption, system crash, or cybersecurity threats. This ensures our record remain accessible and secure, bolstering financial integrity. However, the manual bookkeeping system has limitations. One major challenge is time consumption. Recording each transaction manually, whether it involves daily sale or weekly expenses, is labor intensive. This becomes especially demand during busy periods such as festival season, with increased catering and cake order. Another challenge is the higher likelihood of human error. Small miscalculation or mistranslation can lead to a discrepancy in financial record. Correcting this error often requires considerable time and effort, disrupt other priorities. A strategic limitation is the lack of real-time financial insight. Currently, we must wait until the end of the day, week, or even month to compile and review the data. This delay restricts our ability to make immediately data-driven decisions such as adjusting pricing strategy or reordering inventory. The manual nature of our record also limits our ability to generate detailed financial reports. For example, analyze profitability trends over 6 months or evaluate the cost effectiveness of a specific catering package is slow and cumbersome. Additionally, as the business grows, physical storage of record has become increased challenge, which accumulate paperwork become harder to organize and store. We are considering introduce a hybrid model. This would integrate basic accounting software to automate repetitive tasks like calculation and report, generate while retain manual oversight for customized and quality. This transition will enable us to leverage the strength of our current system while address its inefficient. By adopting a hybrid model, we could reduce errors, save time on data compilation, and gain access to real-time financial insight. This insight will be invaluable for making strategy decisions such as optimize inventory management, improving pricing strategy, and evaluate the business. Automating aspects of financial process will also free up time for our team to focus on other critical areas such as customer service and marketing. Last but not least, I'm not going to forget about the conclusion part. First of all, we explore the importance of financial accounting and report in ensure accurate data and reliable record. This process forms the backbone of any business, enable proper management of finance, compliance with tax regulation, and inform the decision making. The business characteristic of Kedai Kek Malkis, a sole proprietorship, reflects its simplicity and flexibility with full control over decision making and daily operation. Ruzani and her family has successfully built a business catering to kid, meal and catering service. Despite being an informal setup with manual process, the business has demonstrated remarkable revenue potential with gross profit almost reaching 143,910 per month. This small revenue is testament to the owner, dedication, and effective management. We also discussed the manual recording process used in business. While the method is cost-effective and easy to implement, it has significant limitations. Manual bookkeeping can be time-consuming, prone to be human error, and lack to a real system update the modern business required for efficient report and analyze. As a business grows, this weakness could become a major drawback. When evaluate the data, the strength and the weakness, it is evident while the current method offers simplicity, control, and flexibility, the trick posed by inefficient storage issue and limited scalability cannot be ignored. Looking ahead, there are an opportunity for the business to adopt accounting software solution. This tool can help to streamline process, minimize error, and save the time, ensure the smooth operation as the business expands. Technology will not only enhance accuracy, but also provide a real-time financial insight, enable better decision-making. In conclusion, financial, accounting, and report remain crucial for the sustainability and growth of Kedai Kek, Balkish, and Nasi Kampung Gregis. By recognizing the need for modernization and embrace the tool available, this business can transition into more efficient and scalable model. Let us take this a reminder that as business evolves to master their method and strategies,